Fed Chair Powell says rate cuts not in our base case, inflation's still too high. Federal Reserve Chairman Jerome Powell does not see the Fed cutting interest rates this year. Inflation remains too high, and the labor market continues to be very tight, Powell said, adding, financial conditions seem to have tightened, and probably by more than the traditional indexes say. Financial conditions seem to have tightened, and probably by more than the traditional indexes say, he explained, adding that traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. Powell noted that
22 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting. But I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first part, the first 5 weeks of the intermeeting period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requiring assets out of the system open market account as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Wharton professor expects Bitcoin to fall when people feel safe in the banks again. A finance professor emeritus at the Wharton School of the University of Pennsylvania, Jeremy Siegel, expects the price of Bitcoin to fall when people feel they are safe in the banks again. Following the collapse of several major banks, he noted that Bitcoin is enjoying its biggest rally in a long time. In his weekly commentary published by New York-based asset manager WisdomTree on Monday, Professor Jeremy Siegel shared his views on the U.S. economy, bank failures, and Bitcoin's price outlook. Siegel is a professor emeritus of finance at the Wharton School.
Moving higher today, the cryptocurrency surged last night on the announcement that the Switzerland-based bank UBS reached a deal to buy rival Credit Suisse. Also in focus is the potential rate pause or hike by the Federal Reserve. For more on what impact that's having on the crypto market, let's get to Yahoo Finance's David Holleris. Hey, David.
Hey, Rochelle. It's been a very interesting past 10 days, I guess we could say, for Bitcoin. It's been on a tear. And, there's two things going on here. And one is the fact that, we've been into a couple weeks of what we would call a banking crisis. And that's obviously changed how the Federal Reserve might need to react in its upcoming rate hiking decision that's set for Wednesday. And so as a risk asset, a lot of analysts I'm speaking with, or I have been speaking with, have been saying that Bitcoin and other risk assets are poised to do well in the near term. Technology stocks have benefited a little bit from this, but Bitcoin by far has sort of outperformed other assets. Goldman Sachs put out a research note on Friday before Bitcoin sort of crossed this $28,000 hurdle, pointing out that it far and away was the best performing asset of 2023 so far, so year to date. So that's interesting. And then we have this other sort of story, which, Bitcoin diehards sort of believe in, which is that Bitcoin is, its purpose was, when it was created, was to sort of not be in the control of governments. And given that we're seeing, sort of this banking crisis issue, Bitcoin is sort of being viewed again as a safe haven. That being said, investors have thought of it like that for a long time now. And it's often debated. And for the last 2 years, it was debunked. But it looks like, that narrative is sort of coming back into the market. I think, the problem of deciphering the two is that it really comes down to the fact that both are happening right now. So in terms of Bitcoin's trajectory, that obviously looks good for it. We're going to need more data before we can sort of see if people it as a safe haven asset. But interestingly, its correlation, so how much it moves compared to gold in the NASDAQ. NASDAQ you can think of as technology stocks. Gold, it's traditionally thought of as a safe haven. Bitcoin has been correlating more with gold recently and less with the NASDAQ. So that's been a change that we've seen over the last 2 weeks, and we'll continue to watch that. But in general, Bitcoin compared to other crypto assets is definitely seeing the highest bid right now.
Certainly wasn't expecting Bitcoin to go back to being the safe haven after, the wild ride that it's been on then. So what are the expectations here? We know there are always these astronomical sort of predictions as to where Bitcoin could go. How much more of this will we need to see, though, before we can say, yes, this might actually be the turning point for crypto?
Yeah, it's a good question. I mean, I think if you're looking at the crypto market, Bitcoin including, about a month ago, things didn't necessarily look so bright. And now we have people coming out with a $1 million price target in 90 days or 87 days, I guess, is what we've seen. And that looks like it has about a 1% chance of being true. But, I think that if risk assets stand to benefit, and Bitcoin is not something that is, as connected. I mean, it's less connected from the banking system than it's ever been. I think hedge funds, at the very least, will look at it as a way to play on a macro narrative that is more beneficial to risk assets right now. That's what it sounds like from what I'm hearing.
Certainly one to watch, and we'll see what happens when we get that rate pause or hike, whatever the rate announcement ends up being from Jay Powell this week. Yahoo Finance's David Hollerith, thank you for that breakdown.
Please subscribe our channel and share Expo Bitcoin.